the world to see what I figured that this is the time for me to shine and give my informational service and let everybody come in at the pre-market prep and watch me do my live videos every morning and give them the direction that I feel that things are moving. And sometimes it's right, sometimes it's wrong. It's just we want to be right more than we're wrong.
Disclaimer: Elite trading is for educational purposes only. The alerts given are not one-way tickets to be a millionaire. Discretion is advised.
But they want to hit a base hit, they hit a base hit or a home run. Sometimes that home run makes up for the next 10 hits, but at the end of the day, you want to just hit those base hits. That's all it's about every day, and that's what I do. And that's how we became successful. And now we're just wanting to share that success and let everybody else gain something that they don't already know.
I did it again. I always forget to turn that mic on from the scene in the beginning. I'm learning. I'm not the greatest at this. I like to trade. Making these videos is hard. If you're watching, it's hard to get 1,000 subscribers on YouTube. We have all you people in all the other places, servers, Facebook, everywhere. But you're not on the YouTube. Get on the YouTube. I'll fix this stuff. I'll get better at it. I'll be a professional. I'll get the little thing on here to make it look all great. The thumbnail with the big stuff and the big smile. I'll get it happening for you, I swear. But today, we're going to talk stocks. So let's get into the newsletter right now. If the music's too loud, tell me, folks. I don't want to be too loud. Daily newsletter, Elite Trading, 3/12/2021. Let's trade some stocks today. Come on now. Quote of the day, trade what's happening. Not what you think is going to happen. Duh, Gregory. Duh. What's happening? That's what Jesse, what's happening in the markets today? Kaylin, what are we doing today? What's going on? I don't know. Let's watch the price action and let's figure it out. Let's watch the charts. Let's see what they're doing. Where's the fair value? Bulls of the day, RLX, RBLX, TIGR, GSK, AZN. We've got the Bears, QDEL, AAPL, VZ, and VTRS. Daily news, major indices rallied on Thursday, making new highs, but in early pre-market, the major indices lowered while treasury yields edge higher. The S&P 500 index and Russell 2000 joined the Dow Jones in new highs. The NASDAQ also had a strong gain with light volume. DOCU. I like DocuSign. This is a big one. So the stock fell after a strong earnings report. It had good insights for the future. And, also Ultra also fell with the weak earnings and their CEO's exit. So, DocuSign, let's see here. Who's going to be going back when you go to buy a house? You're going to go buy a car. What do you want to do? You want to do it from your house. You don't want to have to go anywhere. So, I don't think it's going anywhere. Good stock. Watch what we teach you later, intrinsic value. And you'll see that there's going to be an intrinsic value placed on DOCU. Watch what I say at the end of this training today, and we'll see how it works with Docu. We'll actually go to the charts. We can pull it up. So NVAX reported a 96.4 efficiency rate versus the original coronavirus strain in the final analysis of phase 3. President Joe Biden said all adults will be eligible for the COVID-19 vaccine by May 1st. Woo! We all get to go out, bring back the concerts. Trading tips: don't buy into the risk. Understand liquidity, learn the basics for reading charts. Let's go. Watching SPCE, SRAC, TSLA, SBAC. We like the A's and SCs and RCs and ECs. We got EBON. There's a trend there. Can you guys, when you read through that, it sounds like there's a trend there. I don't know if it's just me. But, all right. Let's get over to a quick little lesson from Elite Trading for myself here. All right, guys. So let's talk about what is intrinsic value. A lot of people have a different way of putting it into a perspective that makes certain traders understand what they're talking about, but pure definition,
It's official.
when it's just a basic measure of determining the worth of an asset. So you have fair market value, which is a good way to determine what a stock's worth, but you also have what's called intrinsic value, and that does also affect what the value of the stock can be based off of the mind of a trader. So the reason why is you have qualitative and quantitative fundamentals, and when you're going into these different structures of trying to figure out how you find the value for a stock, you're looking at whether it's, it could be like a governance issue. So let's say that you're someone that places high value in a company's leadership, ownership, and that company has an owner that is put in jail for something. So he gets arrested, and then boom, stock goes from $30 to $15. So it cuts 50% retracement, boom, right there. And then you have some that care more about like earnings, the potential to be able to create earnings, and they don't really care more about the governance. They care whether or not the stock is going to be able to create earnings and make money. So the ones that have that governance mindset, that they say, hey, I'm going to chop this thing down. Well, value investors might come in and say, well, that stock was at $30. It's now at 15. This gap between there would be the intrinsic value. So you're finding the value between these two, where it's really worth and then where it got put down to now. And you go in and go, well, it was here. This is where it's at now. There's intrinsic value between there. Maybe even a 50% retracement from the previous move might be a good play. So when we show you the charts later, after this lesson real quick, I'm going to go and show it to you on a chart, and we'll actually put it together. Another way to do it is something like the way that I've described it in the past. And this is where it's kind of like take it away from stocks. Let's say that you own a baseball card and it's worth $200. Well, something happens in the markets where that card's now worth $100 or something, but somebody else is willing to pay you that $200 for it. So you're like, hey, man, I'll do that $200. And then now I have it, it's worth $200. It's mine. I got my money. He owns it now. He can do whatever he wants with it. The reason he would pay for that, even though, because I wasn't willing to sell it for the $100, but I would sell it for the $200, is that he perceives that there's extrinsic value, that there's more, that there could be more to get. So he's got between the value of where he thinks it's worth, which is, let's say, $500. That's why you can charge someone more than what it's currently worth, of that intrinsic value, where they think it might be worth something more than what it is now, so they're willing to pay a little more for it now to get it and secure it. So good morning, Spontaneous Creations. Thanks for coming in. I hope the music and the sound is working better today, and I hope you continue to keep watching. Smash that like button, kick it, punch it, and make it happen. So is it quite loud? How? I turned it down. Alright, turn the music off. I'm going all in. We're going all, let's reverse this thing, rewind it, retract it. I hope you can hear me now. Let me put this thing all the way down. The music's too loud. I gotta go back and listen, I guess. It's my fault. I thought that it was perfect. I'll fix it. It'll be better tomorrow, I promise. So, nobody can hear me. The music's too loud. What are you even doing here if you can't hear me? So, alright, we're coming back. Alright, so if the music's too loud, I do apologize. If you made it this far, if you're still listening, then I appreciate you, and I'm going to tell you what my version of what I think intrinsic value is one more time. So, there's a way to, fair market value is a good way to value a company, but there's also another way, which is called intrinsic value. And intrinsic value can be subjective, and it's hard to estimate. So on some base of, like, when you're looking at whether or not you're basing your value on a company by its governance or by its price to earnings, or like, but whether it has the ability to produce earnings, then you can have a situation where a stock's sitting at $30 and then it gets dropped to 15 because the owner was thrown into jail. And then that way the investors were like, whoa, like this guy is in jail. I don't like that. I want this company to be running smoothly and have good governance. And then they slam the stock down. It goes down 50%. Well, therefore, that value between the 30 and 15, that would call it an intrinsic value, because a value investor like me, I'd come in and say, well, hey, it was at 30, it's at 15. I don't think it should have been hammered down that much. It's still a good company. They have good earnings. The fundamentals are there, and it just got hammered down by a story. So if that's the way that things are moving, in my perception, I'm going to say, okay, I'm going to come in and try to get in at a good value. I want to buy at a discount. So that intrinsic value is what that difference is between the drop before, that initial drop, and then where the company should be actually valued at. So if that helps you, it's a little quick one. I do apologize for the sound issues. We're going to get better about that stuff, but it doesn't matter. It's all about the information you receive. So we do this to have a fun show in the morning with you guys, and we're trying to create some content for you. But really, where the real stuff is, it's in the server. The private server, where we get in there, we talk, and we hang out. We're going to be live right after this video. We'll take a 15-minute break, usually get some breakfast in us, and then boom, we're going to be in there talking trades, ideas. We're going to be giving our opinions. We're going to be talking about different companies. Everybody's looking at different things. We got guys that like oil. We got guys that like tech. We got guys that like value stocks. We like cyclicals. We like puts and calls. If you don't know what a put and a call is and you want to know about options, then let me tell you right now. So a call option is the right to buy 100 shares at a strike price. What's the strike price? It's the actual price that you want to buy the stock at. So when you go in and buy a call and it says $14, that means that you're buying the right from somebody else to buy 100 shares from them by a certain expiration date. The stock moves up $2, you make $2 per 100 shares if you choose to lock that in. Now you got to make sure, did the price of the contract supersede the profits from the move? Should you just close the contract? That's up to you. You got to pick which one you want to do. You can change. You can sell it any time. Once you buy that contract, you have the right to sell it at any moment. You can buy it, sell it, boom, 2 seconds, and lose $5, make $5, break even. You can buy it in 5 minutes. The stock moves up $10, boom, you're selling it for $10 profit on top. So you can sell, roughly estimating you buy something for in the money at around $1. So $1 in call money would be $100. So it costs you $100. Stock moves from 10 to 20. It should be worth possibly somewhere around $800, $900, somewhere in there, maybe possibly $1,000, maybe more. And there's intrinsic value and extrinsic value that could go into that as well. And time decay. So the longer you have, the more time you have for that stock to keep on gaining more momentum. So therefore, it may be worth more than one that had a lesser date. So if you buy one that's got 3 days till expiration, it may not move as much as the one that's 2 weeks out, because they have more time for the stock to continue to go. So we want to understand what we're buying before we get in and buy. Don't just go in there and just buy things for no reason. You want to get in because you have an understanding of what you're purchasing. And the reason why people created these are to hedge their positions. So the reason why you buy a call would be a gamble, in my opinion. You're buying it because you're basically going against the odds of some bigger players. So the way that a lot of people do it is they sell a call to go synthetically short a position, and then they sell puts to go synthetically long a position. That's some strategy. So some will sell a put that's well below the current value, but enough that it's gonna pay them a good enough premium. The premium would be what you pay at that price. So when you're buying the put, that you're investing your money to say that you believe that the stock's going to go down, or you're protecting a current position. That if you have 100 shares at $10 and the stock's at $10 and you want to hedge yourself, you go buy a put and it'll protect you for the 100 shares going down. So it'll give you the right to sell it at that strike price. So keep that stuff in mind. If you want to know more about options, you want to get in, we're going to have a course for you available. I'll be busting out my course within the next week and a half, and we're going to have it for you. I know everyone says, hey, don't overpromise, over deliver, but it's going to happen, Blake. I got you. We're going to have everything put together and done, I promise. And we have the advanced course with Mickey wrapping up. He's only got a few phases left to go, and then he's got some intense training that he's going to be dropping in. But we're going to be dropping these one course at a time, so stay involved, stay watching. If you want to start learning these advanced courses, market structure, Elliott theory, order blocks, if you want to really learn about what the ins and outs about trading is, and you can test out, phase out, use fake money, and become a trader without blowing your money, then invest a little bit of time, invest a little money, and start learning. That's the key right now. So stay in the green, my friends. Stay juicy. Kick, slap, punch that like button. Share this. This is Kaler with Elite Trading. I love you guys. Keep watching. Make sure you subscribe to the YouTube channel. Please.